Introduction Edutech. Today we will be discussing about a topic called acquisition of business, and this comes under the accounting of companies in semester 4 in a commerce group. So acquisition of businesses. So in the term acquisition or purchase, what you will tell? Acquisition or purchase of a company by corporate body. So this is called a company, for example sole proprietorship or partnership firm is acquired by corporate body. So this may be existing one, or sometimes they can form it for only purpose of acquisition. So when a corporate company, means limited or public limited company, purchase a sole proprietorship or a partnership firm, that is called as an acquisition. When corporate body purchase existing corporate body, so public limited to public limited, private limited to private limited, such type is known as amalgamation, absorption or reconstruction. So here we can tell, see, when a company, when I am a, for example X Limited purchasing CA firm, so this is called acquisition. But X Limited is purchasing Y Limited and forming a new company XY is called amalgamation or absorption or reconstruction, whatever you can call. So limited to limited purchasing can be considered, a corporate company is purchasing a corporate company is considered as amalgamation, absorption or reconstruction. But when a sole proprietorship or partnership is purchased by a corporate body is called as acquisition. So why do they need this acquisition in businesses? Acquisition of businesses. One, for expansion. So I want to expand my territory. Suppose this X Limited is doing a business only in, for example, Karnataka, you think. So they wanted to expand in north, for example Delhi, Haryana, Chandigarh, some other places. So same, this one of the company called Y Limited is doing the same type of business existing in the north, for in Delhi. So they wanted to expand their business in going there. But Y Limited is already well established and they have the network and they have the operations over all the districts, networks, cities, everything. So X Limited will purchase an Y Limited company with already existed company, so to expand their operations. So you are operating, so they don't need to invest more on or do R&Ds on the newly territories, because it's already well versed, company is already existing there. So they will purchase and they will form a new company through amalgamation and run the business. This example applies to international level also. So for example Hindustan Liver, what we will purchase, like our shampoos, Pantene, many soaps and all we are doing Hindustan Liver Limited. So that is also one of the, is not an Indian company, it's a foreign companies where they are operating in India by amalgamating with Indian companies. So they will, for example Hindustan Liver need to expand their territory in some of the places of northeast where they don't have any facilities. So what they will do, the already existing companies, he will go and purchase this, Hindustan Limited will go and purchase X Limited companies in northeast area of a country, and they will establish the businesses over there. So but it is not so easy as what we discuss here, but it includes a lot of process. So today, now as an accounting student, we will discuss how we are going to account this companies in acquisition of business purchase in both in purchaser book as well as seller book. So how we are going to account it, how we are going to present in balance sheet, how we are going to present in the P&L items, how we are going to calculate that purchase consideration. So for example, I am purchasing one company, A is purchasing a B company, so A has to pay a sum of amount to B, right? Then only I will be getting his company's control over to me. So but so for example, today B, I am going to purchase an B company. So what is gonna, A is purchasing B. So B's value of the company is 100. When he started his company, he has invested 100 rupees, you think. But now A can't give 100 rupees and take over B. But his valuation current after 10 years, this would have been 10 times $1,000 or 1,000 rupees, you think. So now A has to pay this 1,000 and he has to control over the B because valuation of companies got increased. So this A Limited will pay in different mode. He can pay through cash, he can pay through shares to get a control over B. That's how we are going to discuss how we are going to calculate those purchase amounts and how we are going to account it. Before going to jumping into the calculation sums, we have to understand some of the terminology in which we are going to use in this accounting of companies. Under that acquisition of business, we are going to use some of the terminologies which you will be going through more than 2 to 3 classes. So you have to understand the concept of those items. So shall I rub this? So the terminologies or important items that we are going to discuss is very important for your understanding the concept of acquisition of business. This will help you to calculate your sums or understand and how to present in the examinations as well. The first item we are going to consider is purchase consideration. This is one of the important item. So purchase consideration. What is purchase consideration? For example, I am A Limited purchasing B Limited. So A Limited is purchasing B Limited or acquiring B Limited or doing amalgamating or both combiningly AB Limited, whatever they are doing it. So the main idea of A is to purchase B or take a control of B. So now if you think, for that A Limited has to pay a B Limited, for example 10,000, you think he has to pay for 10,000 rupees for taking a control over of B Limited. But how you will calculate this exactly? That is my 10,000 value, that is my consideration. How B will be understanding this is my consideration is correct or not? For that, if it is if they are given in the sum or if they are stated in something, then this will be calculated under net asset method or net payment method. If they have stated this, that A Limited will be paying a B Limited based on net asset method, so you will be calculating based on net asset method. If A Limited is going to purchase B Limited based on net payment method, then you will be calculating a net payment method. So for purchase consideration, these two methods we will be following it. So one more thing I wanted to tell you, in all your examination, we will be accounting in purchaser book only. Mostly sums every examination are we are calculating at purchaser book. Purchase is nothing but A limited. B limited is seller book or vendor book. We can tell anyone, any of this, seller or vendor. So we will be accounting in purchase book. So now in the statement, if they are concluding that this is calculated by net asset method, then you have to calculate at net asset method. If they are telling at net payment method, then you have to calculate at net payment method. Now now we have to understand what is net asset method, right? So net asset method. The name itself it suggests it is your net of asset. Net of asset means what? Your asset minus liability. So both these are fixed assets plus current asset. Here liability both current liability and other current or long term liability. So in this case liability means only current liability or other current liability. You have to not consider any shares or capital of a seller company. So all this calculated based on seller book only, but we are accounting in purchaser book, that's it. So purchasing, always accounting is comes in purchase book, but we already we are calculating a purchase consideration based on our seller book or vendor book. So example B limited. So I have an asset, fixed asset, for example I have computer 10,000. I have a machinery 15,000. I have bank cash I have some 10,000. So then I will tell debtors or customer value. So already I have made a sale, right? So I have some 5,000, you think. So 10, 20, 25, 30, 40,000 is my total asset value. This is my considered. Now for example, now liability I have to take, right? Liability what I will have usually? I will have creditors. Creditors nothing but your vendor payable you have to pay, right? So some 10,000 you think. So you have bank loan, some 5,000, some outstanding expenses, some 5,000. So what is you will have? Now net of asset 40,000 minus, so total of this is 20,000 you think. So 40,000 minus 20,000, that is equal to 20,000 you have to. So this 20,000 is considered as purchase consideration. So net asset method is about netting your total asset minus current liabilities, excluding your share capital. So this 40,000 minus net of 20,000 you are lessing out. So your balance 20,000, that is your purchase consideration. So A limited will be paying B limited 20,000 as purchase consideration. Okay. So these accounting terms and all I will tell you later. How you gonna account in books and all. So what basis? What is this difference? How you will book in? How you will be booking in your A limited and all I will tell you later. How you will gonna book? How you gonna transfer this assets into your A limited? How you gonna transfer this B limited? How you gonna pass the journal entries and present in balance sheet? That I will tell you later. So this here we will calculate. We will think about what is a purchase consideration. How we are calculating. What are the methods for that? So this is a net asset method. So this is very very important. So for example in examinations or in textbooks or wherever, if they are not mentioning anything, so just calculate a purchase consideration, something they are mentioned like this. Just you have to assume that you have to calculate based on net asset method. Okay. So the next item is net payment method. So here what I will tell you. A limited, B limited, A limited, B limited. A had to take a control of B limited. Here they are going to do it under net payment method. Net payment method is nothing but A limited will do a detailed research and they will book in a value. For that they will book in a value. They will come to a value that I will be paying you 20,000 rupees. But this 20,000 they will tell I will not pay through cash or something. They will tell I will pay 10,000 through cash. In the statement itself, in the examination or in books, they will be giving this amount. This is how we are going to. Means they will not give you 20,000 I paid you. They will give in this breakdown. So we have to calculate the total of that. So they will tell 5,000 I will pay through equity shares. 5,000 they will tell you I will pay through preference shares. 3,000 they will tell you I will pay through debentures. So this is how they will mention it. So you have to total of this 1, 2, 3, 4. So 10,000, 15, 20, 23,000. So my purchase consideration is 23,000. That is A limited is paid to 23,000 rupees. They have paid a PC. So this is how we have to calculate the purchase consideration in net payment method. So you understand, right? So this calculation, this accounting calculation and all, I will teach you in next class. But you understand the concept what it is, because it's very important to understand the concept rather diving into the sums. Okay. So next, this is an important purchase consideration we have calculated. So next terminology I'll tell you. I'll just write important concepts. So we understand purchase consideration, what is purchase calculation, what are the methods of purchase consideration. Next, assets taken over, liabilities taken over. So I'm discussing this in both one line item. So now A limited purchasing B limited. So always assets and liabilities will be taken over from B limited to A limited based on agreed value. Agreed value means it may be balance sheet value. So for example, current year I have 2023 is my year, you think. So 23, 24. March 31st, 23, my balance sheet of computer is 10,000. Or you can tell this is 22, 23. So March 31st, 22 you take. So 10,000. Now A limited and B limited came on December 31st, 2023. After our financial close, after that they have came in after how many months? 12 minus 3, 9 months. After 9 months, they are coming to purchase B limited. Now as of our balance sheet value, this is our 10,000 you think. Now B limited will tell you I can't give you my computers based on 10,000. It should be computers, whatever the machinery. I will be providing it based on the market value only. So they will come into the conclusion. Okay, we'll purchase at a market value at 10%. So what A limited will tell? Okay, 10,000 is my current 10% they will tell. So 11,000 is right. 10,000 plus 1,000. That is equal to 11,000. So now B limited will sell A limited at 11,000. So this is asset taken over from A limited, from B limited to A limited at agreed value. Agreed value may be your balance sheet value, or sometime it may be at your market value at 10%, or it may be reduced value. A limited will tell you no, we can't pay at computer at that, we will pay less than 10%. So 900 you have to less. So 9,100 you will pay. So this is called agreed value. So based on this only we will be calculating our net assets in our balance sheet, because under net asset value they will tell based on agreed value. They will tell, they are telling a balance sheet type. So whatever the balance sheet they have given, we can take a net of asset, that is asset minus liability, and we can calculate a purchase consideration. But sometimes they will tell agreed value or percentage they will give. That time we have to calculate the value whatever given in the balance sheet. On that we have to take a certain percentage and calculate our existing asset and liability value. Then we have to calculate a purchase consideration. So that is called asset taken over or liability taken over. So agreed value. It may be balance sheet or it may be market value. Understood? So this is a assets taken over and liabilities taken over. So the next concept, interest payable on purchase. On PC, purchase consideration. For example, A Limited purchase B Limited for 25,000, you think. I am just giving a lower numbers here, 25,000. So this happened on December 31st, 2023. So A Limited only paid 15,000 on this date, but balance 10,000 they have, right? This they are not paid till March 31st of 2024. So 3 months. So now B Limited can ask them to pay along with the interest. So now A Limited has to pay. This will be all mentioned in our agreements and all. So now at 2%, you think. So 10,000 into 2% for 3 months. How much? 200 into 3, 600. So along with 10,000 plus 600, 10,600. A Limited had to pay to B Limited along with interest. This is the interest payable on purchase consideration. Okay, this is very simple. So the next concept is one of the important concept, goodwill or capital reserve. Okay, goodwill or capital reserve. So this method or this item, goodwill or capital reserve, will be considered in net payment method. For example, now I would decide A Limited to B Limited, deciding to pay 1 lakh. Okay, A Limited decided to pay B Limited 1 lakh as a PC under net payment method. Now B Limited have value net asset we have to take. So your all your assets will be some 25,000, or you consider it is as 60,000 less liability. So you will take some 40,000 as a liability, you think. So 20,000. So your net asset. So now, but this is my net asset, unless if in the statement or in the examinations or in the sum they not mention any payment method, net asset or as a net payment method, you can consider net asset method. If already they mentioned that I am going to pay A Limited to B Limited at 1 lakh as a PC, so already PC is already decided. Now, so net asset is only 20,000. So for this 20,000 is there now. Only for B Limited value is 20,000. But I am telling I will be paying him 1 lakh, right? So 1 lakh minus 20,000. This 80,000. This 80,000 I am paying more, right? this 80,000 will be considered as a goodwill. So B Limited goodwill I am paying 80,000. So this will be considered as goodwill in my A Limited books. I mean to say purchaser books. So 80,000 will be considered as a goodwill account in my A Limited. But for example, now this guys is there, you think A Limited. Now my net asset is 1,20,000, but I am paying 1 lakh only. Right. So 1,20,000 I am paying. 1,20,000 is my net asset, but A Limited is paying only 1 lakh. So 20,000 difference is there, right? So 20,000 less I am paying it. So this 20,000 will be considered as capital reserve in my A Limited purchaser book. So if I am paying more than my net asset, then it is a goodwill for purchaser company. Then if I am paying less than my net asset, then that will be considered as a capital reserve in my purchaser book. So this is very important, because usually when you post a journal entry in A Limited books goodwill account, what you will do, all your net asset I will tell you 60,000 you think, liability 40,000. So I am paying how much? I am paying 1 lakh. So this is my bank account. So the difference 60 minus 140 is 80. So 80 will be my goodwill as debit. So this will be my credit. So if you put together, this will be 1,40,000. In books it will be shown like this. Suppose if my asset is more than this, for example my net asset is, I will be showing it here. So debit, credit. So net asset 1,20,000, or you can tell net asset or all assets, something called 80,000 you think. My liability is 1 lakh, right? So I am paying bank account, how much I am paying? I am paying some 10,000. So one more asset you think it is some 40,000. So 1,20,000 total asset I have taken. Liability 1 lakh I am getting reduced. So 20,000 I am paying only 10,000. So I am reducing. When you compare this, there is a 10,000 difference, right? This 10,000 will be my capital reserve. So this will be credit account. This is capital reserve is in liability account, right? So it is credited. All these accounts are debited. This all assets are coming from B Limited to A Limited. So it is in debit. So this is in all liabilities in credit. So this is what I am paying them from my bank. It is going out. So it is 10,000 I already included. This is the difference. That is 10,000 will be my capital reserve. If my purchase consideration is more than my net asset, then it is a goodwill for me. If in the point of purchaser company, if it is less than my purchase consideration, it is a capital reserve for me. Okay. So you understand this, right? So next topic we will go to next topic, realization expenses. So for all doing from A Limited to B Limited is acquiring, or B and combining and forming AB Limited, whatever, there will be including of expenses like auditors, lawyers, valuations department, everything, right? For them and all we have to pay. That expenses will include. For example, 10,000 they have paid it. So if A is paid to B, then in A books this will be considered as goodwill or miscellaneous or preliminary expenses. So this will be shown in balance sheet. So A limited, basically we are discussing everything at purchaser point of view. So because we will be accounting in purchaser books most of the time, so this will be considered as goodwill or preliminary, which will be amortized over the period. Okay, this is very, very important. So we can see what are the concepts we had discussed. PC, assets taken over, liabilities taken over, then goodwill, capital reserve, then realization expenses, interest payable on acquisition, piece. So these all items we have discussed. So this is very important concept. So going forward, these items will be always included in your examinations, sums or textbooks. Wherever you go through in this amalgamation, absorption, reconstruction or acquisition, this terminologies or this concept you have to remember. Okay, thank you. We will discuss in next class regarding how the journal entries are posted, basic journal entries, how we are posted. After that we can dive into the sums. Once again, thank you.